opening there, along with a bunch of other stocks in just a bit from now. We have Varun Goel, who's now with us. He's a Senior Fund Manager Equity at Mirae Asset Investment Managers. Varun, good afternoon. Great to have you with us here. Thank you for your time. I don't know if you got the chance to listen to the Muthoot management earlier. Stock's up 8%. I don't know if you own this name. You have a view. Go on.
I think gold finance overall continues to be an attractive opportunity. And I think whenever we see sharp spikes in gold prices, typically the companies or the various institutions which are engaged in this business, their ability to lend more for the same amount increases. So I think typically we have seen growth coming back to gold finance companies in times of big gold price movements. And this year looks like one of those years. So I expect gold finance companies should do well.
Hi, Varun. Good afternoon. Good to see you in. So from the banks and financial pack, since we touched upon that first, what would you be most optimistic on? You know, the couple of conferences that have been held this week, the feedback that I've got is there's plenty of interest now in the PSU banks. They haven't done much, I think, for the last 12 months or so, but suddenly that interest level is back out there. Your take?
Yeah, good afternoon, Nigel. So I think broadly we expect BFSI companies to continue to do well. We have already seen 50 basis points of rate cut this year. I think this is at least 50 and maybe even 75 coming pretty soon. And looking at the inflation scenario, and I think an important thing is that looking at the weakness in the US dollar, I think RBI will carry out significant monetary easing because they don't have to worry too much about rupee now. And therefore, we believe RBI rate cuts could be front-loaded from this point onwards, and that should be good news. I think loan growth should stay resilient for system at a whole at 12-13%, and some of the larger public and private banks should be able to deliver high double-digit lending growth. And I think post the first 2 quarters, we should see stabilization of NIMs. And that should lead to good earnings growth from the second half of the year for most large banks and financial institutions. So broadly, we are pretty optimistic on this space. I think valuations are pretty attractive, both for public and private sector banks, and we continue to be invested in the same.
Okay, all right, got that point. Varun, hi, good to have you on. I remember you saying that the market and overall the economy should see strong cyclical recovery over the next 1-2 years. The question is how to play that. I mean, whether you're better off playing that. I think real estate is a sector that you singled out even last time, that maybe that could be a way of playing it. Beyond real estate, if the market is poised for good earnings growth, then which sectors, where will it show up first?
Yeah, good afternoon, Subhi. So our sense is yes, post economic slowdown and earnings, kind of a holiday in FY25. I think FY26 should see a lot better economic growth. So we expect nifty earnings growth to move from low single digit in FY25 to let's say 12-13% in financial year 26. And we believe banks, telecom, IT, pharma will continue to be the drivers of that story. Also, please keep in mind that in FY25, there is a big decline in earnings of metals and oil and gas, because the refining margins were poor and the commodity prices came off. And that has impacted the earnings growth in FY25. And I think some of that will see good earnings growth on that low base. And therefore, we believe that journey to 10, 12, 13% kind of earnings growth is not that difficult. And our sense is with the benefit of these tax cuts and rate cuts, we should see economic growth coming back very strongly in the second half of this financial year. I think already the results that came in, I think they're either in line or slightly better than what we were expecting. And our sense is cyclical, domestic-oriented sectors, be it real estate, capital goods, banking and financial services, auto, generally should see a good year going ahead.
Varun, the broad view, say a couple of months back, was this is the time to bet on large caps. And small caps went through a period of correction. From here on, would the buy still be with the large caps? Or do you think that as the earnings recovery plays out, then maybe in one's mutual fund, you should be biased more towards, lean in more towards small and mid-cap funds to make that extra money?
So good afternoon, Rima. So, of course, if you look at the valuations based on FY27, Nifty 50, I think, trades closer to 17 times. The small cap index trades closer to 19 times. But I think the important differential is that Nifty 50 will have earnings growth of 12-13% on a CAGR basis, whereas we expect small cap index as such to have a 20% kind of earnings CAGR between now and 27, and especially the base is very low. So our sense is, both the asset classes should do well. Of course, every investor needs to do his asset allocation in terms of large, mid, and small. In fact, we launched a small cap fund in January, and while the start was very volatile, I think things are beginning to look up. And our sense is for investors who have a 5-year plus investment horizon, small cap also continues to be a very attractive asset class.
Varun, how much of cash are you sitting on as a percentage of what you manage?
So Nigel, as a house, we don't take very aggressive cash calls. I think a couple of percentage points, but nothing beyond that.
Nothing beyond. All right. The other sectors that were in focus, they ran up too much, and then they cooled off for the likes of defense as well as railways. I'm not sure what kind of exposure you have out there. Defense clearly has come back into play post the skirmish that we had with Pakistan on the border. But what's your view on both these two sectors? Because both of them have a long runway. Some of them have got very, very expensive on valuations, but there are very high interest levels. Your take?
Well, I also will be a believer in the defense story. I think it's a 5-year, 10-year kind of a story. And looking at the geopolitical situation that we have, I think defense is kind of a core requirement from a country perspective. So I think incrementally we would see more participation from the private sector. Of course, there are several defense PSUs which are doing quite well, and our sense is a lot more startups and private sector companies will also begin to participate. Valuations, though, of course, remain a challenge, and one really has to pick and choose companies which have visibility of growth at the right valuation. So we do have some exposure to defense space, and we would wait for some price correction before further increasing our exposure on the defense side.
Okay. All right, Varun, we'll leave it at on that note for this afternoon. Thank you very much for joining in. You have a good weekend, and we look forward to connecting again soon. Thanks for joining. Okay, let's just get